So many people are not taking full advantage of the Fibonacci retracement. In this video, I'm going to show you how to get the most out of the Fibonacci retracement. I'm Juan, and I'm going to share with you one of my swing trading tips.
Shout out to you and your channel. Have been Justin. So his channel, by the way, is worth a look for those of you who are interested. He has some really phenomenal swing trades. Every time he came up to me and said, "Hey, this company is going to fly in medium term, kind of 2-3 weeks." I never got a bad advice from this man about companies that when he said, "Hey, I researched this," I think he won't say anything about companies he doesn't know, but I had like 3 or 4 different hey, heads up, it always flew high. So really worth checking out his channel.
What is the Fibonacci retracement? It's a method of technical analysis for determining support and resistance levels. It provides you with a trading opportunity at areas of value during a moving trend. So if there's an uptrend and there's a pullback, the Fibonacci retracement gives you an advantage of possible support and where it might retrace to and reverse. It can act as support and resistance. So why does the Fibonacci retracement work? We have to keep in mind this is known as a self-fulfilling prophecy. So whenever we have a trade, especially a swing trade, we want to increase the quality of our trade. And the way we increase the quality of our trade is by using the Fibonacci with other tools. There's lots of traders that subscribe to the Fibonacci levels. When we get in a trade, we want to find where traders are going to buy the stock. So there's traders that subscribe to the Fibonacci level. There's traders that subscribe to support. There's traders that subscribe to moving averages. There's traders that subscribe to the MACD. So taking advantage of the Fibonacci is finding areas where all these areas meet together and gives us the best trade quality. We're looking for the best entry, and we're trying to avoid buying high and selling low. So if this is a constant problem where you're buying at the top and selling as it drops, this may be something that you want to apply in your trading strategy. So if you're using TradeView, you simply go to the left toolbar here and you see Fibonacci retracement. I already put a star on it. And once you put a star on it, it's here on your chart. So all you do is click on it, click on the lowest area of the uptrend and go to the top here. Once you do that, it gives you values. For us, 50% or 0.5, this is considered a deep pullback. And this is an area of high interest for Fibonacci retracement traders. The second is 61.8% or 0.618 level. This is a very deep pullback. And this is considered the highest quality pullback for the Fibonacci retracement. This is the best area of value during a moving trend upwards. And what does a moving trend upward mean? Well, we pull back the chart here. We see that the stock is on an uptrend. It's not on a downtrend. It's not trading sideways. It's on an uptrend. We missed this, and we want to try to get in the best area during the pullback. So 61.8 here is considered a deep pullback. And you see here, it respected the 61.8, and it eventually bounced off of it after testing it several times. Now, if you're shorting, the way you apply the Fibonacci retracement, same thing, go to the Fibonacci, but you start from the top and you work way down. And now this is the downtrend. And you would look for pullbacks if you wanted to short. You see here, it pulled back up to the 61.8. So this would have been an entry for a person that was shorting, and they would have gotten good return here. So you see here, this is 766, and weeks later, it dropped all the way down to 551. So this is almost 200 points that a shorter could have made if they were shorting the stock just using the Fibonacci retracement. So what is a common mistake of using the Fibonacci retracement? One common mistake is using the Fibonacci retracement by itself. So on this chart example, the stock pulled up all the way to 102, pulled back, tested the 6180, tested it a few times. Then there was a false breakout and it crashed downwards. So if you would have taken this trade and bought in here at the 61.8% because you thought that it was going to reverse, you would have consolidated then eventually crashed and lost quite a lot of money. Using the Fibonacci retracement alone is not going to help you when you're trading. And this can be applied to swing trading and day trading. You can't just use one tool alone. And you have to understand that some of these tools, like the MACD and other tools, they're considered static and they lag. So you have to combine static and dynamic, using price action, using momentum, using tools like the Fibonacci retracement and moving averages and trend. Okay, so let's look at Microsoft as an example. This time we're going to use the Fibonacci, but we're going to use it in combination with other factors to make our trade quality much more higher. So it's in a clear uptrend because it bounces up, goes down, goes up, makes a higher low, higher high, higher low. So it's clearly on an uptrend, but we missed this uptrend. So we want to find good entry point. So we use our Fibonacci, we go to the low and to this high here, and now we want to find the best entry. So the first thing we see, it's starting to pull back. We should identify support and resistance. So if we pull back, there's no old resistance. So when do we get into this trade? Do we get in immediately after we see that pulls back to the 61.8%, which we said it's a deep pullback? Now let's add a few things. So it's also bouncing off this support area. It's coming across this area of support. We see some deep wicks, which says there's some price action. So there's some good price action that's positive. It's responding well to the 61.80%. Let's add a moving average and let's add the stochastic RSI. We have this, a good practice to do when to enter. We can put a trend line from here. So now we have this, it bounced off of this trend line, bounced, broke off of it a little, went below, bounced, bounced. Here at the 61.8%, it would have not been a great entry because it still has this trend resistance to break and it's still below a moving average. But look at here, it broke this moving average, it's above the resistance, and on the stochastic RSI it's also on an uptrend. So this trade quality is A++. We have the bounce off the Fibonacci retracement, the bounce off the 61%. It's breaking previous resistance. This white line here was resistance, so it broke the resistance. It also broke this trend line, this downtrend. It broke this downtrend in here. And it's also, this is the area where it's above the moving average. And then if we look up down here, it's also above the stochastic RSI. This would have been the best entry. So you would have gotten in at 103. And since then, it pretty much has been on a major uptrend. Okay, so let's look at another combination that I like to use. So we have the smooth moving average, CE, which you can download here on TradeView for free. It gives you these momentum buy signals. I never use them alone, but in combination with other things, they can be really, really powerful. Been on an uptrend. If we look at the daily, it's been on an uptrend, and we missed this capture here. And now we want to get in at this best location, best area for the pullback. It went up, bounced here below the 61%. But if you look at the stochastic RSI, it's on a downtrend. So it kind of tested this, had a little spike, still tested it. Here we got a buy signal from the CE, buy signal. It's on an uptrend for the stochastic RSI here. That's June 28th, 2021. And here, if we build a trend line, it's just starting to break out of this trend line. So we have here starting to break. The best entry would probably be right here because you have multiple confirmations. You have, it's above a trend line. We have the trend line. It's on an uptrend on the stochastic RSI, and it's breaking this downtrend. And if we see what the stock did after, it went on a big uptrend after it broke out of this area. So this would have been a great entry, and you would have been able to ride this all the way up. Let's take one. Let's put this in real practice. Let's say we're looking at Disney, and this is real time. So this is December 27th. Let's say I wanted to put this on my watch list, and I wanted to trade this. First thing I would do is from here, this spike all the way up here. Okay, so it dropped below 61%. So the first thing, we want to make sure that it's above 61%. Then we want to form this downtrend line, and we want to add our moving averages. If I was going to put Disney on watch, I would say I want to see it break above this trend here. First of all, it has to break this trend. It went all the way down 78%. So it has to break this trend. It has to be above the moving averages. The stochastic RSI, stochastic has to be on an uptrend. and I would prefer to get a buy signal. So this wouldn't be a good swing trade yet. Try this on another stock. Nvidia it's currently looks like it's forming a bull flag. So we'll see if it breaks out of this. But if I wanted to trade this, I would start here and I would want to see it pull back somewhere in this zone here. So between 260 and 270, you want to find the best setup. You want to see what's in your favor, and you want to have all those things line up and trade your way. So that way you don't lose money. And if you want to get ideas where to find stocks, and you want to maybe kind of scan a few, you want to find some that are oversold, you can go here on Finviz and just start kind of like looking. So we have Peloton took a big drop. You can put in a screener and then get multiple looks at stocks and kind of try to guess to see which one you think would be the best swing trade. So we have VCTR. Let's look at VCTR. It was on an uptrend, pulled back a bit. So it's on a clear uptrend. So let's put the Fibonacci here where the uptrend started. It started, you see it bounced off the 50, but this would have not been an entry point for us. We'd probably want to see maybe break out of this trend. First of all, on the stochastic, it is on an uptrend. It needs to break these moving averages. And this could be a possibility. You know, it pulled back to the 50%. We will want further confirmation by breaking this trend here and breaking above these moving averages, closing above them. And that would be a possible entry to see continue the uptrend. So you see here, it did pull back to like the 50%, pull back, but you want to wait because it can just flush down like we've seen in the past. So those were just a few examples. I hope you enjoyed it. Please subscribe, comment, and like. I'm going to have a free intro to day trading course. You can click the link below to get the materials and subscribe for the notification. We'll start the course in February. Hope to see you there. Thank you for watching.